Hey, it's Bob Icino, co-portfolio manager of the Stock Think Tank, of course, along with Mike Arnold. I mentioned in the last weekly update that you should read that newsletter because it said everything in there that we thought, at least for the foreseeable future, and a lot of it is actually coming to pass. I hope you're happy with the performance. You should be. We're up over 14% year to date, going to the end of February. Since then, we've actually covered two more trades, both at a profit. So we're up a little bit more than that year to date. But let's go with the February month end because we currently, as I speak to you right now, have two core positions and two special plays. And out of those four trades, two are up, two are down. So we might end up right there. I'm not sure. I'm speaking to you on a day when the NASDAQ recovered all and more of a loss that it had yesterday. It is Tuesday afternoon. NASDAQ up over 3.5% today. And you had things like Tesla up double digits at one point. You had those meme stocks, GameStop and AMC going up again. And basically all of the, I don't want to call it irresponsible, but all of the just kind of freak show trading that we saw prior to the last dip. Now, you know our natural process is to take profits. And as I mentioned, we closed out three trades since my last update. One was healthcare group. We didn't like that, so we got out a little bit earlier. We moved our stop up and our stop got triggered. It has since continued to come off. But we had full profit on Allstate, and we had more than full profit on ADP because we moved that target out a little bit. So we far offset the small loss that we had in healthcare services group. So because of that, we're up a little bit more than our last February update. So things are going as planned. There's a couple of things that give me pause. Number one, it's getting harder to find stocks to get into. I've mentioned this before, and we're still in that state. Number two, it's getting harder to get in these. We need pullbacks, and they're not coming as predicted, as often as they have in the past when the market's actually on a sort of normal trajectory. And then the third thing is you're seeing sell-offs in toward the end of the month, which has allowed us to outperform for 3 consecutive months going back to December. You might think that's a great thing, but I actually don't like that. I like when we outperform cumulatively. When we start outperforming in consecutive months, that could signal potential trouble for the equity markets in general. Because when that happens, it means that toward the end of the month, whatever rally happened during the month is coming out of the market. That means the buy and hold crowd is weakening. And that means a bigger sell-off could be imminent. We got a pullback in yields today, what we call a bull flattener, essentially bull market in stocks, and the curve flattened. And we had 30 years go down about 5 basis points in yield. 10 years went down about 3, and then the 2-year note went down around 1 or 2 basis points. So the yield curve actually flattened a little bit rather than steepening, which is what has been happening. So that's where you get your NASDAQ rally, but it's not likely that that's the long-term new direction. So if you did some things outside of our portfolio in terms of technology, Tesla, if you're involved in those silly meme stocks, be very careful. We had Bitcoin up again above 54,000 again today. Some of those same scenarios that preceded past end of month sell-offs. So we're not very invested right now. As I mentioned, 2 core portfolio plays and 2 special plays. We will try and remedy that if the market gives us the opportunity. I will talk to you guys next week.